Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Stocks swing as markets brace for the U.S. payrolls report and a possible Supreme Court ruling on U.S. President Donald Trump's reciprocal tariffs. Rio Tinto and Glencore resuming talks to create what could become the world's biggest mining company with a combined market value of more than $200 billion. And investors continue to digest U.S. moves on Venezuela, with nearly 20 oil executives set to meet President Trump later today to discuss what's next for the country's energy sector. Well, it's just gone 9 a.m. across the Emirates. I'm Joanna Bersetchi in Dubai. Lots to talk about on the show today. Geopolitical developments in Venezuela over here in the region as well. We're going to talk about Yemen too. But then also a big day for markets. A couple of things on investors' radars today. We got the U.S. payrolls report, so let's watch out for that. Obviously, if it's a weak one, then perhaps you could start seeing more rate cuts priced into the U.S. curve. And then we also, in theory, we should be getting the Supreme Court ruling on Trump's reciprocal tariffs and whether they are deemed legal or not. And if they aren't, then the Trump administration could be due for refunds to many companies that were already charged a tariff rate. So something to think about there, and it could have actually macro implications as well. So that's happening later today. As for where things stand this morning, Asia Pacific slightly more positive handover this morning, up to 0.2%, so marginally more positive towards the end of the week. S&P futures not doing a whole lot, still shy of 7,000, but close to all-time highs here too. So trading sideways into these two big events happening later today. Brent, we have seen recovery. Remember, it was just a couple of days ago we were trading through $60 to the downside. A lot of focus on Venezuela, the potential for oil and the ramp up in supply out of Venezuela potentially in the next few years, in addition to a theoretical breakthrough with Ukraine and Russia. But on top of that, I would say geopolitical premium very high on the agenda as well. And keep a close eye. We touched on this yesterday on the show, but keep a close eye on the demonstrations happening in Iran too, because that's been happening locally in the region, not getting a lot of attention, but the demonstrations are beginning to grow. So something to think about as it pertains to oil too. And then gold, you see slipping a little bit, down 0.2%. We have spoken a lot about the rally up in gold and silver, especially towards the last couple of months of the year. But I would say the last few days, we've seen a slight pullback because there's an index rebalancing going on. And so some of this weakness is actually technical weakness because of those index rebalancings. Switching over, and this is a theme that seems to be coming up with domestic policy with Trump, more of a focus now on housing affordability. And here, he seems to be placing it at the forefront of his agenda going into midterms. And I just wanted to flag that the spreads between MBS and Treasuries is actually quite tight. So look at the white line there. It's been trending tighter and tighter and tighter. So that spread is very tight. But keep an eye out on nominal yields in general, and the fact that, you know, a rising economy, an economy that's doing well, will boost yields upwards. Okay, let's also check in on how markets in Asia are faring. Winnie Su is in our Hong Kong studio. Winnie.
Morning, Joanna. As you just mentioned, we're seeing MSCI Asia here marginally higher, but we're headed for the best first full week of trading since 2023. And yes, we're closely watching that potential Supreme Court ruling when it comes to Trump's tariff. And that's likely going to provide some tailwind for the exporters in our region. And hence, you're seeing exporter-heavy Japanese stocks here leading gains, also supported by a weaker yen and also strong earnings from fast retailing. But at the same time, when you take a look at Kospi, it's actually up for 6 days already. And we've also got breaking news crossing the wire that South Korea plans to start its 24-hour onshore FX trading starting this July. And that is also part of the step to boost its capital markets reform. Now, you flip a word and take a look at what's going on in China, as we've got key economic data coming out from the country with CPI and PPI data here, both slightly surprising to the upside, but not so much. In terms of CPI data, it's actually driven by the food cost. And when it comes to PPI data here, down 1.9% year over year, slightly better than the estimate of 2% decline. So that is showing that there is some effort when it comes to anti-involution kicking in. Back to you, Joanna.
Winnie, thank you so much. Winnie Su in Hong Kong. Interesting inflation figures coming through from China this morning. For once, actually seeing a surprise to the upside. Well, switching over to the U.S. now, Federal Reserve Governor Stephen Miron says he is looking for 150 basis points of interest rate cuts this year to boost the labor market. He also said underlying inflation is likely running at 2.3%, which means that Fed officials do have room to cut further.
I'm unsurprisingly the lowest dot. I'm looking for about 1.5 points of cuts. A lot of that is driven by my view of inflation. I gave a speech about this about a month ago in December at Columbia University. My view is that almost all of the excess inflation over target is due to quirks of how we calculate inflation.
For more market insights, Brett McGonegal, CEO of Capital Link, is here with us. Happy New Year to you. Let's pick up on these Stephen Miron comments. How much of a driver do you think for global markets or U.S. markets do you think the Fed is going to be this year?
What part of the Fed? I mean, what they're actually doing or saying. I think when we look at it, I've always been a critic of the Fed. I think that they're behind the curve, and we've spoken about this many times. Mm-hmm. I agree, there's many more cuts to come. And I think it's going to drive kind of the next bull market leg in the United States. If you look at, you take the politics out and you take posturing out, look at Chinese rates, look at U.S. rates. Chinese rates are 250 basis points lower than U.S. rates. How do you have the G2 world of two countries that dominate global trade be that polar opposite in monetary policy? Doesn't make any sense to me.
Why do you think the Fed have been lagging or behind the curve, as you say, to use your term?
Well, so I would say the last year or so, I think is largely political. I would say before that, I just think that the system that they're using...
But political in that they are putting up a fight against President Trump?
Yeah, so I don't know if it's necessarily that aggressive, but I think that there's a tendency and a hesitancy for them to really look at the underlying market. I think it's more the dot plots and the stuff that they're doing, where they've gotten away from actually looking at where the real sentiment and the real drivers in the U.S. economy are. Most of the job creation's at the lower end of the spectrum. It just doesn't really make sense. I do think there's a political part to it.
Okay.
But I think that before the political play, they're just behind the curve. I think it's an antiquated system.
Yeah, it's interesting because when I was reading all the sort of 2026 economic outlooks from various analysts and sales-side research, people still think this is going to be a positive year for the U.S. economy and for U.S. growth. So how can the Fed be undergoing an aggressive easing cycle when the U.S. economy is still growing north of 2.5%?
So I think that if you look at really what's driving the U.S. economy and you get the tariffs out of the way and you look at where the U.S. base economy is, it's really being driven by a handful of companies. And if you take AI away from it, I really don't know how you can baseline any sort of, aggressive strength in the market. I think you would say it's kind of bumping along the bottom. So, it doesn't make much sense to say that when you're cutting rates, you're going to have some real vicious rally because you would portend that the underlying economy is not that strong. What I think is it's being masked. There's a lot of masking agents going on. There is some sort of inflation that comes through from the tariffs. But underneath the market, we need a broadening out. And we need the U.S. economy needs to broaden out, not just the market. And I think that's what will happen if you get rates down, you get private enterprise, small, medium enterprise back at the table, and you kind of get the last leg of this, kind of baseline to move forward.
And it's a big year for politics, domestic politics. The midterms are coming up. And even President Trump, I think a couple of days ago, he said, if we don't win the midterms, I might get impeached, right? So he's very laser focused on this.
And look at what he's doing.
The stakes are high. The stakes are high, of course. But I think we're also getting a better understanding of what his domestic policy agenda is going to look like with housing affordability.
Yep.
He's really been hammering that message the last couple of days, and defense as well. And do you see these as an opportunity?
I think let's start with the first driver is next week Davos, right? I don't think it's a coincidence that all these multilateral relationships have been withdrawn from a week before you get onto the European stage. Right? Davos is not necessarily the cheering section for the United States. So he's walking into a meeting in an interview or speech a week from now where he's just dislocated the last kind of connection points to the multilaterals. Right? Trump is not a multilateral guy, right? He's unilateral in every way he looks at things. So I think you have that going on. But what I think is most important is the defensive side and the rotation of defensive stocks. It's largely a short-term endeavor. We've seen that the market just kind of gets buoyed by the big mega caps.
Yeah.
And until something changes that, I think you're just going to have these asset allocations into defensive stocks for a period of time. I think it's short-lived, and then the momentum changes and everybody starts to chase again. And I think it's, it's a boring story, but it just keeps kind of rolling over and replaying itself.
And yet with that, I guess people want to be positioned in places like precious metals, like gold and like silver with the massive spike that we saw towards the end of the year. And then also some of these key transition metals as well, the likes of copper and aluminium. Yeah,
so, I wrote in the notes about silver. The rhetoric around silver just makes me laugh. Silver all of a sudden is a bubble. It's a short squeeze. It has no fundamental reason for it to be there. So I would ask anyone that kind of makes commentary on stocks, isn't the Magnificent Seven, isn't it all of that all in one times 100? I mean, how we say that these stocks, NVIDIA puts on $3 trillion of market cap in a year, and that's not extended, but all of a sudden silver's extended? I mean, silver's a base metal that's been used for centuries.
Yeah. Right?
It's not a GPU play. It's not a modern theme. It doesn't have a thematic that has to play out overnight. So I just think it's funny how the prognosticators position some of these the themes that all of a sudden silver is a runaway train at 70. I think Citibank put a $300 price target on it yesterday.
Right.
So I'm not a silver guy, but I want to say that I think you have to kind of take away some of the thought process and the headlines and look at the underlying. If silver is a runaway train and everyone says it's going to come down 50%, what happens to Magnificent Seven? I think we got to be careful of what we wish for.
Yeah, it's a fair question. But so far, the earnings growth is there. But I guess the question for this year is whether it holds up. Brett, always good to chat to you. Thanks for coming on the show. I will be at Davos, so we'll see what President Trump comes out with in Davos in a couple of weeks. Brett McGonegal, CEO of Capital Link. Thank you. Now for a look at some of the other stories we're following today. Nearly 20 oil executives are slated to meet President Trump at the White House later today as the administration pushes them to help rebuild Venezuela's battered energy sector. Sources say execs from companies including Chevron, Exxon, Vitol, and Trafigura plan to attend the meeting. Reviving Venezuela's oil industry could cost up to $100 billion over the next decade. President Trump is directing Fannie Mae and Freddie Mac to purchase $200 billion in mortgage bonds, his latest effort to bring down housing costs ahead of the November midterm elections. Trump announced the move in his social media post, saying it will drive mortgage rates down and make the cost of owning a home more affordable. China is said to be planning to approve some imports of NVIDIA's H200 chips as soon as this quarter. Sources told Bloomberg that Beijing is preparing to allow local companies to buy the components from NVIDIA for select commercial use. The H200 chip, however, will not be used for the military, sensitive government agencies, critical infrastructure, and state-owned enterprises due to security concerns. White House Trade Advisor Peter Navarro says U.S. industrial breakthroughs will eliminate China's market dominance in rare earths. Beijing's efforts to withhold supplies of critical minerals last year helped fuel a trade war with the U.S. But Navarro told us that American innovation will boost domestic production.
The China relationship is a very difficult one. China has been flexing its muscles now in Europe and India and the United States, saying basically, we're going to do what we want, and if you try to stop us, we're going to take away your critical minerals, because they think they have a monopoly on it. But that's just a matter of time. American innovation is going to quickly wipe away that innovation, that threat, that weaponization.
And you can listen to the full conversation between Michelle Hussein and Peter Navarro by searching for The Michelle Hussein Show wherever you get your podcasts. And coming up, Rio Tinto has resumed talks to buy Glencore in a deal that would create the world's largest mining company. The latest on the mega merger next. Welcome back to Horizons Middle East and Africa. I'm Jemana Versace in Dubai. Rio Tinto is resuming talks to buy Glencore in a deal which would create the world's biggest mining company. Big news today in the mining space. Let's bring in our metals and mining reporter, Martin Ritchie, who joins us from Shanghai. Martin, so there were talks between Glencore and Rio in 2024. They were put on hold. It seems as though the story has come to the forefront again. What do we know about the potential underpinning of what a deal could look like?
At the moment, we don't know a lot, other than the fact that the two companies have started talking again. That's already been confirmed, and as you said, they did come together for discussions about a merger back in 2024, which didn't come to anything. We've had sort of 2+ years of lots of deal-making activity, some of which has come to fruition, such as Anglo combining with Teck, some of which hasn't, such as BHP trying to take over Anglo. So there's a lot of activity in the mining space. For this deal, one of the key complications is coal, around coal. Glencore being one of the world's biggest coal suppliers, but Rio having already exited the fossil fuel. So they'll have to come to some kind of arrangement, what happens there, whether it be perhaps a spin-off before the deal or a restructuring afterwards. But this deal is very much focused on, as a lot of the transactions or potential transactions have been focused on copper. The miners want a piece of action on copper, given all the demand that's coming from renewable energies and the energy transition.
Well, I was quite literally going to ask about that. The crown jewel, I would say, of Glencore is copper. And we've been commenting on the fact that it soared through $13,000 in the last couple of weeks. Would you say that that is perhaps one of the main attractions for Rio?
I think that the kind of record high copper prices we've seen certainly lends a very appropriate backdrop to this kind of deal. For years, people have been talking about copper prices going to these kind of very high levels because there's not enough supply in the world. And that's been motivating the miners to really try and come up with deals, to try and combine themselves in ways that gives them more copper exposure and gives them the ability to invest more for the future in mining. Having said that, there's kind of very sort of specific reasons why copper is rallying at the moment. It's ahead of potential US import tariffs, which means people are rushing copper to America to try and get there before Trump announces anything. So, it's still a very positive metal, but we saw Goldman this morning, for example, saying that they expect a correction in the copper price later this year once all that kind of fluff comes out of the market.
Yeah, so copper, but then also, as you say, one of the hurdles to cross is the fact that, and this is in the article that you and the team have written, Glencore is the world's biggest coal shipper, so something to bear in mind if this deal goes ahead. Martin Ritchie, Bloomberg's metals and mining reporter. Thank you so much. Coming up, Zambia pushes for a new IMF deal with elections looming. We'll bring you that story next. This is Bloomberg. Zambia says it will seek a new loan program with the IMF as its current deal expires this month. The government says it wants negotiations concluded as quickly as possible, with elections looming later this year. Our Chief Africa correspondent Jennifer Zabazaja joins us from London. First of all, is this announcement by Zambia a surprise? How common is it for countries to ask for a new type of program as their current program comes to an end into an election?
Right, Jumana, there's quite a lot of factors there, as you were just rightly pointing out. Over the past year, we had been paying close attention to a lot of the staff level meetings that Zambia was having with the IMF. So the expectation was potentially that we would see an extension, though the fact that we are seeing potentially the aspirations to restart a new program in an election year is a bit surprising. And I think you just take a look at some of the other countries and potentially the precedent that we have seen. There's not very many. If you look in the past decade, one example is Ireland, also Portugal. And we should point out that the election in Zambia is midway through the year, about midway through the year. It's in August. Though, if we talk about the realistic nature of which whether we'll actually see a new program, I think you should just take a look at potentially some of the meetings that we had seen prior to this initial announcement and some of the descriptions that we were getting from the IMF about the current state of Zambia. So just the latest, we had heard the IMF saying that the country had restored macroeconomic stability and built buffers that have improved economic resilience to shocks. So it was seeming like with this initial program that they were in talks with, there seemed to be some consensus about at least the trajectory that the country and the economy was headed in. Potentially that gets them closer to securing a new program. But of course, as you and I and many of the viewers know, it does take quite a long time. And of course, in a year with an election where there tends to be quite a lot of election spend, it might be quite difficult for this government to secure this new program. But it still will be interesting to see some of the nuances to which the IMF and also Zambia decides to move forward with, and at what point we actually see a new program coming about, if it is before the election or maybe sometime thereafter.
Yeah, one thing that strikes me as somewhat of a tailwind to Zambia is the fact that they are Africa's second largest copper producer. And we were just talking about copper in the prior segment, massive run up in prices there. Does that perhaps provide a bit of a buffer to investors who may be concerned about the fact that Zambia will run a period without an IMF program in place?
Certainly, and I think if you take a look at what some of the investors are saying, and even the performance of the Zambian kwacha, we have seen a lot of strength in the economy, especially considering some of the prices and the upswing that we have seen in copper prices. If you take a look just at exports of copper for Zambia, they account for about 70% of revenue. And so, as you were mentioning, there are quite a bit of tailwinds. If you assess what investors are saying, there is still a bit that investors are trying to grasp in terms of this new program. But some of the investors that Bloomberg has spoken with are saying that potentially it would help keep state spending in check, and potentially it could help boost investor confidence if we do, in fact, see in the run-up to the election more election spend. Though definitely helping to buoy prices for the economy are these copper prices that we've seen over the past few months. And it's continuing to help stabilize and even stabilize, the economy in Zambia.
Yeah, interesting. Jennifer Zavazaja, our chief Africa correspondent, bringing us up to speed the latest with Zambia. Well, coming up, precious metals, as we just spoke about, have been a key support for the rand also so far this year. We'll speak to Casey Sprake, market strategist at AG Capital, and whether those gains are sustainable. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Stocks swing as markets brace for the U.S. payrolls report and a possible Supreme Court ruling on U.S. President Donald Trump's reciprocal tariffs. Rio Tinto and Glencore resuming talks to create what could become the world's biggest mining company with a combined market value of more than $200 billion. And investors continue to digest U.S. moves on Venezuela, with nearly 20 oil executives set to meet President Trump later today to discuss what is next for the country's energy sector. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Versace in Dubai, and later today, two signposts we're watching out for. Number one, payrolls report, obviously a big focus for investors now that we're back on track again with the timing and the schedule of these reports. But then also the Supreme Court ruling on Trump's reciprocal tariffs, and if they do end up being rescinded, that could have macroeconomic implications, potentially could lift yields higher, and potentially also a tailwind for stocks too. So something to bear in mind. Could be two major market moving events later today. As for the handover, mostly positive from Asia Pacific, as you can see, up about 0.1%. S&P futures trading sideways. Brent also seeing a bit of a recovery the last couple of days, up 62, back to 62.5, up 0.7%. At one point, we were trading through $60 to the downside. Again, a lot of focus on fundamentals this year, but as well, keep an eye on the uptick in geopolitical premium too, not just with Venezuela, but with those demonstrations in Iran as well, something to think about. And then gold, we are sitting shy of $4,500. We were down 0.2%. There's some index rebalancing going through for gold and silver, which is putting downward pressure on the precious metals the last couple of days. And then switching over, we spoke about this earlier on the show, but I do just want to highlight that it seems as though one of the focuses for President Trump into the midterm elections is housing affordability and making houses more affordable for American consumers and home buyers. And here is what the market is telling you. The actual spread, though, between mortgage-backed securities and U.S. Treasuries, that white line, has been trending tighter and tighter and tighter. And so he could try to bring that spread in a little bit more. It might be challenging, but ultimately, maybe what he really needs to be targeting here are yields. And if you're in an environment where inflation premium is rising or fiscal premium is rising, then that's going to put some pressure on long-end yields. And then it becomes a matter of the nominal yields as opposed to the spread between Treasuries and MBS. So again, something to think about. But the latest was his directive to Fannie and Freddie to buy $200 billion worth of MBS securities. Okay, let's also check in on how markets in Asia are faring. Winnie Su is in our Hong Kong studio. Winnie, walk us through the handover.
Yeah, so with the MSCI Asia just marginally higher today, we are really waiting for that potential ruling from the Supreme Court around U.S. tariffs. And like you mentioned, it can provide some tailwind for exporters in our region if the tariffs are ruled unlawful. And hence, you're seeing exporter-heavy Japan's Nikkei 225 here leading gains up 1.5%, also supported by a weak yen that's now hovering around 157 against the dollar, as well as the better earnings from fast retailing that was helped by a recovery in its Chinese business. CSI 300 here, the onshore China benchmark up 0.3%. We got the economic data from China showing that CPI, a bit of a rebound due to the food costs, but also PPI coming slightly better than expectation, driven by the anti-involution efforts. Now you flip aboard and we stay with China, but we take a look at a key listing today, which is Minimax here, a first day debut in Hong Kong, up now 80%. And this is still really that AI topic. And the company is one of China's biggest Gen AI startups and also one of the first China's Gen AI startup to go public, and hence a lot of attention. Also because it's backed by Alibaba and Abu Dhabi's sovereign wealth fund. Back to you, Jomana.
Winnie, thank you so much. Winnie Su in Hong Kong. South Africa's rand has been on a strong run, with markets showing little sign of stress despite the currency trading near multi-year highs. The rally has been buoyed by record-high precious metal prices and improving investor sentiment after economic reforms were rewarded with a credit rating upgrade from S&P in November last year. Investors are increasingly looking ahead, weighing whether those supports can keep the currency resilient amid a shifting geopolitical backdrop. Joining us now is Casey Sprake, market strategist at AG Capital, and our chief Africa correspondent, Jennifer Zabazaja, will also join the conversation. Good morning to you, Casey. There's so much I want to talk to you about, but I'm going to start with the current geopolitical environment, because geopolitics have once again been thrust to the fore at the start of 2026. And I'm not obviously just talking about Venezuela, but the fact that the stance out of the Trump administration seems to be a lot more hawkish. You know, over December, there were airstrikes even on Nigeria. He's been very critical of South Africa domestic policy and leadership as well. What is the setup going into this year vis-a-vis geopolitics and specifically the Trump administration's approach to the continent right now?
Yeah, good morning. And I think South Africa really finds itself in a very difficult place at the moment. for a relatively small country and economy, politically, we've always punched above the weight slightly in the geopolitical space. But over the last year or so, we find ourselves increasingly at odds with the Trump administration at this point. I think ideologically, the two countries are as far apart as ever. So how that is going to play through now in 2026 is the big question across financial markets in South Africa and investors alike. And in this increasingly geo-fragmented space, I think the continent as a whole has got a lot of questions to ask for itself as well.
Yeah. Earlier on in the show, I don't know if you heard, but I was having a chat to Jennifer about Zambia, and then also the fact that Zambia do stand to benefit from rising copper prices. They are obviously not the only country in Africa that are going to be benefiting from the rise in metals. How do you see this as a potential economic tailwind into 2026?
Oh, no, it's fantastic, and I think that will be the key story for South Africa. I mean, at the moment, our terms of trade are the strongest they have been in a very, very long time. Bear in mind, South Africa is a mostly exporting nation, particularly within the commodity space. Gold prices at the moment with our record highs has been fantastic. It's helped bolster the rand in that as well. I mean, I think just even towards the end of last year, South African, the local currency has had its strongest year since 2009 and appreciated around 12% against the US dollar. So we really have, for some time, already been receiving that commodity boon.
Casey, this is Jennifer here in London. As Jumana was just alluding to there, we have seen some positive tailwinds for South Africa vis-a-vis the FATF grey list being removed from that. We also got the credit rating upgrade late in 2025. Do you think markets have fully priced in some of those positive indicators for the South African economy, or are some investors potentially still sitting on the sidelines a bit?
I think some investors are sitting in the sidelines. South Africa's economy has unfortunately been in the doldrums for some time. It's been a long time since I've been able to speak very, positively around the outlook. So things are improving. As you mentioned, we received the much-needed investment upgrade. Unfortunately, South Africa is still regarded within junk status territory, but we are moving upwards and onwards, I would say. More importantly, we came off the FATF grey list last year as well. So that's really adding to the positive momentum. But I think more importantly, it's South Africa's reform story that's really starting to gain traction now, our strong push towards fiscal consolidation. But unfortunately for investors, we need to see numbers across the board first before they catch those tailwinds too quickly. So I believe, some investors on the sideline just waiting to see can we carry this momentum throughout 2026.
How much of, we mentioned, of course, you did allude to the fact that, of course, this has been a difficult time for the relationship between South Africa and the U.S. But if we take a look at the U.S. and what we are seeing, at least from the central bank there, and potentially what we will see, could there potentially be some upside in the equity market or even for the rand if we do see rates continue if we see a bit of a dovish central bank Federal Reserve in 2026?
No, definitely, and I think that's one also the key stories at the moment. The interest rate differential between the US and South Africa is widening at this point. Obviously, seeing the direction that the Fed is going, at this point, we are pricing in that the Fed will probably cut more than maybe what markets are anticipating at this point, depending, of course, on who replaces Jerome Powell at the end of the day. But yes, that will add a further boon to the South African rand. I mean, at the moment, we are around 1650 mark to the US dollar. We believe we've got room to strengthen a bit more towards a 16 handle, bar any major geopolitical shocks as well, which at this point is difficult to foretell.
Of course. What other asset classes then, Casey, are you watching closely as it pertains to South Africa and even just sub-Saharan Africa more broadly that could experience some tailwinds heading into 2026?
I think if we look specifically at South Africa first, even on the local bond market had an extremely strong year last year. But I think a lot of that sort of positive momentum and strength in there has largely been sort of priced in by markets already. So I think it'll be hard to for investors to lock any more profits in that space. What we're getting really excited about at the moment is within the sort of local equity space. And again, that's been a very long time since I've been able to sort of be more positive around SA Inc. But if you look at the JSE All Share, I mean, that had a smash of a year last year. I think it's increased by around 38.5%. So that's, yeah, it's been an incredibly strong year. And we see a lot of that momentum sort of carrying through towards this year. For Africa at large, I believe, again, it's a space for African equities. On the bond market, it depends very much which country you're looking at. You mentioned earlier, of course, Zambia is a great example. It's got its own idiosyncrasies at the moment. But I think at large, within the emerging market complex, Africa is starting to slowly stand out, especially if you look across the geopolitical space. A lot of questions around South America, barring the situation around Venezuela, if there's going to be sort of some level of contagion effect there. So I think Africa is starting to slowly but surely attract attention for all the right reasons, especially when you're starting to see the sort of strong fiscal drive we're seeing across the economies.
Yeah, so interesting after a strong performance last year as well for the Johannesburg Stock Exchange. Casey Sprake, market strategist at AG Capital, and Jennifer Sabazaja, our chief Africa correspondent. Thank you. Well, coming up, Saudi Arabia's push to end UAE's role in Yemen. We discuss relations between the two Gulf powerhouses next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Saudi Arabia is moving to end the UAE's role in Yemen and diminish its influence in other areas. That's including its role in the Red Sea as tensions rise between the two Gulf powerhouses. The Saudi-led coalition is also claiming the UAE has helped Yemen separatist leader Idris al-Zubaydi escape to Abu Dhabi. Dana Khrish, Bloomberg's UAE bureau chief, joins me now to help us understand exactly what's been happening on the ground. So just walk us through the events in Yemen and how it's led to this moment, Dana.
Morning, Jumana. So for now, we're seeing reversal of gains, right? So the Southern Transitional Council, which seized Hadramaut and Al-Muhra last month and kicked out Saudi-backed forces from it, and that's, of course, how this crisis all happened, have now lost these strategic provinces, especially Hadramaut, which is near the border with Saudi, and it's Yemen's largest province. Now, what we saw is that the Saudi-backed forces there, which is, of course, part of the internationally recognized government, and the Saudi-led coalition used their jets to strike positions and help those advance against the STC. So the STC is this separatist group in Yemen that seeks autonomy. But mind you, they're all part of this governing body. It's called the Presidential Council. And they're supposed to continue combating the Iran-backed Houthi rebels that have, of course, seized Sana'a back in 2014 and are still very much strong. And we've seen what they've did in the Red Sea in cutting shipping lane and cutting shipping routes, of course, and disrupting shipping. But more than that, the Saudis have accused the UAE of being behind that STC attack, of arming local factions there, and asked the UAE to withdraw its forces. And that's what the UAE did. It issued a statement saying, we're going to do just that, and quote, withdrawing on its own volition, and said it was unfortunate that the Saudis were dragging its name into the conflict there. But what we also saw that the Saudis, didn't stop there. This week, the head of the STC, who was supposed to travel to Riyadh for talks to end the crisis, never boarded the plane, and the Saudis accused the Emiratis of helping him flee to Abu Dhabi. Now, we couldn't verify this information, and the UAE has not yet commented on that. The UAE has been quiet since the last statement from the Defense Ministry saying that it has completed its withdrawal from Yemen. So on the ground right now, what we're saying is that the Saudi-backed forces have retaken those strategic areas, and they are trying to kind of even consolidate people outside of the STC's head, al-Zubaydi, to bring them to Saudi and try to resolve the crisis within that governing body under the Saudi umbrella.
Thank you for breaking it all down for us and giving us the context there, Dana. Where does this leave UAE and Saudi relations right now?
These are two major Gulf powerhouses and U.S. allies, oil-rich, and, naturally they want to expand their influence and be kind of the go-to power player in the region. That's just natural. As of now, and despite this escalation that we've seen in the past 2 weeks from the Saudi side, it's hard to say there is a diplomatic crisis. We saw that, Saudi sent a new consul general to Dubai, and that was received by a deputy in the UAE foreign ministry. So they've appointed a new one instead of just, they could have, let it go. But there is not yet a severing of ties. This, what could mean, of course, is exacerbating the situation in Yemen. First, the humanitarian situation, and we've seen that deteriorate heavily, and from the UN reports that there is food scarcity there. And of course, the Israeli strikes and the US strikes on Houthi rebels have actually also worsened that situation. It could maybe embolden the Houthis even more than just standing or watching what's been unfolding in areas under the control of the Saudi-led coalition. So it could embolden the Houthis, and it could definitely exacerbate the conflict in Yemen that's been going on for 15 years now. But on this side, on the side of diplomatic relations, the fact that they brought the consul general, the Saudi consul general, to Dubai and appointed a new one, it means maybe they just want to kind of keep it intact. And we've seen some perhaps mediation efforts from the Qataris or Omanis. We've seen phone calls, but nothing concrete about severing of diplomatic ties. So this is where we stand right now.
Dana, thank you so much. Dana Khresh, Bloomberg's UAE Bureau Chief. Now for a look at some of the other stories we're following. Turkish Foreign Minister Hakan Fidan says clashes between Syrian government forces and the Kurdish-led Syrian Democratic Forces in Aleppo justify concerns about the group. Fidan is accusing the SDF of, quote, turning into a tool for Israel's divide and rule policy, and has called on the group to leave aside what he described as terror and separatism. Meanwhile, the Syrian government says it has announced a ceasefire in Aleppo. Israel says efforts to disarm Hezbollah are far from sufficient after Lebanon says it has now disarmed militias in the south. The Lebanese army says it has achieved the first phase of a strategy to disarm all militias on its soil, demobilizing the area between the Litani River and the Israeli border. U.S. Ambassador to Israel Mike Huckabee said in an interview Israel must protect itself against Hezbollah when asked whether a large-scale military operation in Lebanon is expected. Protests in Iran escalated significantly overnight amid an internet blackout as thousands appeared to take to the streets across the country, including the capital, Tehran. Human rights news agency says the death toll in the state crackdown on the protests has risen to 42 people. President Trump said in an interview with Fox News he has, quote, put Iran on notice.
But I have put Iran on notice that if they start shooting at them, these people are totally unarmed people. And they love their country. They want something to happen. Look at their country. They've gone back 150 years. But I've told them that if they do anything bad to these people, we're going to hit them very hard.
And coming up, security guarantees for Ukraine are a key sticking point as President Trump seeks to broker a peace deal to end Russia's war. We'll bring you the latest next. This is Bloomberg. Security guarantees for Ukraine are a key sticking point as President Trump seeks to broker a peace deal to end Russia's war. Ukraine's allies have proposed legally binding security guarantees and troops to protect the country once a ceasefire is reached. Greg Sullivan, Bloomberg's Russia economy and government editor, joins me now. So, Greg, let's talk about the latest round of discussions. I mean, certainly there has been more momentum. A lot of talk about the security guarantees. Trump has ruled out Ukraine joining NATO, but there is discussion around an Article 5 type structure. What do we know?
Well, despite a lot of the leaders after these discussions proclaiming progress and success in converging around what these security guarantees would be, a lot of the details do remain unclear. We know that there's talk of a multinational force in Ukraine to help in case of any breach of a ceasefire, but the scope and the role of that remains unclear, as does to a large extent the American involvement. We know that the Americans will be involved in the security guarantees, but to what extent is still unclear. The White House has talked about monitoring and intelligence sharing, and we know that the UK and France have committed to send troops. Now, I would caution that it's still unclear whether Russian President Vladimir Putin would accept any of this. He has ruled out NATO forces on the ground in Ukraine. And just yesterday, on Thursday, the Russian Foreign Ministry said this would lead to the increased militarization and be viewed as a threat by Russia.
Okay. So it seems a bit of a non-starter, obviously, for Russia. I mean, what else is holding up these talks? That feels like a very insurmountable hurdle to cross. But then also there's a question of territory, too.
Absolutely. And that, in some ways, is an even bigger sticking point. So even while the U.S. has managed to come closer to the Ukrainian position on security guarantees, there's this issue of territory. Ukraine has been reluctant to cede territory that it still controls, but that Moscow is demanding. Moscow has not backed down from this demand for territory in the east. They've routinely said that they will continue to pursue their goals militarily, and even last night launched an airstrike against Ukraine, a massive one. So they are still pursuing that territory. They have not backed down. So far, Ukraine does not want to cede that territory. So it's a very big obstacle that remains.
Greg, thank you so much for bringing us the latest. Greg Sullivan, Bloomberg's Russia economy and government editor. Now, elsewhere, NASA will launch its first ever medical evacuation from the International Space Station in the coming days due to a crew member's health issue. While the unidentified astronaut is stable, the agency is cutting the Crew 11 mission short because the station lacks the equipment for a full diagnosis. This is NASA's first mission that ended early for medical reasons. And coming up later today, don't miss this month's edition of Bloomberg Tech Europe. Tom McKenzie speaks to Grammy Award-winning artist will.i.am about how AI is shaking up the music industry. That is at 8:30 a.m. London time, 12:30 p.m. if you're watching across the Emirates later today. And a look at markets as we head into the final trading day of the first trading week of the year. And this is the scoreboard. We're basically flat for S&P futures. But I will say for the year, though, we are off to a more positive start, tracking gains of more than 1% for both the S&P and the NASDAQ. Watch out today for jobs figures and then also that potential Supreme Court ruling on Trump's reciprocal tariffs. Both of those events could be quite market moving. European markets also seen opening up in the green, up 0.4% as we get going and gearing up into the European session as well. A close eye on geopolitics, not just in Europe, but Venezuela and in this part of the world with Iran demonstrations too. That's it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai.